Around the charts and that 1207, just in the middle of Asia session. We've just had the Aussie CPI come out and in line with expectation, but a further drop than expected as well. So previous was 5.4%, where they were expecting 5.2, and it came in at 4.9%. So with this drop off, look, I pretty much assume that everybody knows that CPI and inflation is dropping somewhat. Obviously, people are at different levels in that. US seem to be sort of progressing, but they went a little bit harder earlier than the RBA have. But certainly, I don't think it's any sort of big sort of shocker now when we've seen the turn. Obviously, sort of flattened out. We've seen it come down each month. I think the greater shocks are going to be when the prints come in a little bit hot. So a little bit sort of not only above what expectation is because the expectation is down, but above the previous. So you're starting to see a bit of a flare up of inflation again. And I think that's where the bigger dramatic kind of moves are going to be sort of coming. So with the Aussie, look, I was looking, I had an order, obviously just marked out here, order filled at 64.50, which was an absolute banger of an entry. So it came down here. So we've seen a little bit of a bounce so far. I think realistically, as to whether we can get back up to these levels over the top here, it's mainly predicated on the DXY strength. Obviously, DXY Aussie isn't part of, but there's still the overall sort of risk sentiment in the market, I think sort of can sort of flow on to the Aussie as well. So that's what's been happening early Asia. Last night we had a big miss on the JOLTS numbers and that. So the expectation I think was around 9 million and change, and we came in I think 8 million and change. So lower than expectations, and obviously sort of it was a fair miss to the downside. So leading into that, we saw DXY was on a bit of a rip, as it has been always, sort of bouncing off its main trend, which I'll have a look in a sec. Aussie held up really well through most of the day, but absolutely towards sort of middle half and the end of Europe session into the start of US, just got absolutely clobbered. Gave back all its gains plus some, so just really came down here. But once that data dropped, and this is where the data dropped, this candle here, and it just boom took off, and it just sort of rallied on through the night. So found some resistance where in line pretty much expected with these previous highs that we dropped from down last week. So a big regain there, and obviously now, as I said, we've had the CPI figures that have dropped off, and it's come down a little bit. Of another sort of confluence with that top side here was actually of this drop that came down in the end of the Europe session. The 161 retracement was tagged almost perfectly, and then sort of it's drifted off of that. But as I said, sort of we got that sort of drop down on the report, the CPI report. We can get rid of this one now, and it's just it hasn't committed to the downside. I mean, if this was a couple of months ago, Aussie would have been seeing sort of something sort of like, down here. Bang, would have been something similar like this. Like it wouldn't have recovered. But this is the change that we're seeing in the market now. Instead of everybody going, well, you know what, we kind of expected this anyway. We expected this to be sort of dropping down. So you're going to get that initial sort of drop off because part of the market as well is positioned for the fact that we may have seen the spike and push up. So they're going to exit those positions. Bang, we got the drop down. That's fine. But now that the market's sort of really having a little bit of a chance to think about it, we're still sort of seeing DXY not overly recover or break any significant levels on its recovery after last night's drop down. This is still providing Aussie with some chance in the short term. So realistically, we'd like to get back above sort of the 72 level where the data dropped, but ideally back above 80. And then, of course, if we can take out the highs, so 87, break into those 90s, I think there's a good chance. We do have a little bit more of the sort of daily resistances up above the sort of early 6,500. So this is what I'm trying to look for, to get a break back up here. One last little shakeout before we pop up to these levels here. 65, 65.20, and then sort of I expect a little bit of sort of further cooling off. We've got a lot of data coming out this week. We've got US GDP tonight, ADP. We've got a little bit of Euro news as well, which by proxy can obviously affect the Aussie. So yeah, I'm not expecting any sort of fireworks, but certainly if we can get back above the data drop point 80 and then these previous highs from early this morning, then that's just going to sort of pave the way, and I'll still be looking for these 65, 65.10. I think would be a safe spot. Of course, you don't come up to these resistance points, but you want to get those fills or like those sort of limit orders filled, so you can sort of close those positions out for some profit. It doesn't matter about the last couple of pips. It's better to just take the bulk. So yeah, that's Aussie. Aussie actually looking, as I said, is quite resilient, which is good because for the last month it has just been absolute rubbish, realistically rubbish. Copper, we saw a big rally. If we looked at yesterday's video, I was saying that there's more upside to come on um, copper. Obviously, last week we sort of tagged that price target. Market agreed. They sold off, chop, 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 back and forward. And then this was about the point yesterday where I think I was doing the recording. And, obviously, bang, we've only majority. We saw a bit of a sell down. That was in line with the Aussie, obviously coming down prior to the JOLTS reports as well. And bang, we've just sort of seen that fly up, and it's tagged this top resistance line, which is up around these wicks from back in start of the month, 10th of August. So, we're starting to create a nice little resistance zone where we know that the sellers are sitting here. Here we are, resistance, boom. Okay, so this is where we know the sellers are. So again, I want to see this big line here tagged. As to where it comes, like sort of along here, along here, along here, whatever, doesn't really matter. I suppose that's the thing. It's a sliding scale of how long it takes to get there. But if you zoom out with this copper trade, see if we've still got them marked out on the, not on the daily, on the 4 hour though. We can see that this is going way back, originating March 22. It's just rejected every single time. We added a little bit of a push. I think it was probably end of May, was it? Where are we at here? Sort of July side of August or so. So it's just been a sort of horrible sell down, bang, recovery. This is where I think we're going to see some reactions and possibly a deeper sort of pullback. But again, I still think we've got a little bit of upside to come on copper. If we could break this, I mean, the fact that we broke out the first time and didn't reject straight away, if you look at the previous times, it's clipped it and it's dropped, more or less clipped it and dropped, depending what sort of time frame you're sort of looking at on. But here we sort of hung outside. This is on a 4 hour, so this is outside it for, better part of a day before obviously the market bang sold back down again. And this is what we've been seeing the US dollar absolutely rip off the lows. So first time out and actually hold out for a sort of small significant amount of time before selling back down. Second effort could sort of raise the likelihood that we actually sort of see this have a decent shot at actually breaking out and holding out. Of course, then we're looking at the horizontals, which are these big red zones here, which you probably see a bit better on the dailies and the weeklies. But so there's definitely some big sort of supply zones up above us. But certainly, short term, a touch up of that falling resistance, I think that's a good place that we can look for it. If we click across to DXY, so this is the big one. Obviously, DXY seems to be the market mover at the moment. This main trend that it has just been sort of respecting just insanely. Every time it's come down, this was like BOJ, I can't remember what it was exactly, the yield curve control. That didn't actually eventuate, it was just some talk, but of course the market reacted and held that as well. But every time it's come back here, this has been a big sort of yellow bearish candle, and bang, and exploded back up. Same here, what was on the downside here, bang, exploded back up, it was coming in strong here, grabbed again, boom, up to new highs. This time, this is what's significant about this, that we're actually starting to see a close down outside this, well, excuse me, to the bottom side of this rising support. This needs to be taken notice of because, as you can see, prior to it, we did yet again tagged it, and then at one stage this was a big blue candle coming right up the top up here, and we were just seeing the same price action, respecting this sort of rising support. These are where the buyers are, buyers are, buyers are, flew up, JOLTS report came out, bang, smashed down. Look, it was data driven, but the fact that the buyers were happy to let this go and not respect this sort of rising support needs to be respected. Plus, these tops here, where we sort of come around here, it's called a high heel top, or well, I guess this would be a sort of reversal. But if you sort of flip this one around here like this, the idea sort of being, where is this? And it's like a shoe or something, I suppose, like this, and then this kind of shape here. They sort of drift up, down, explosion up, and then breaking out of this zone. And this is a very strong bottoming, or in this case, because this is flipped up the other way, reversal signal sign. So this, along with breaking this rising support, needs to be respected. Like, it's not to say that, you know, you're not going to see the US dollar sort of completely sort of drop off straight away to the downside here. Like, we're not going straight back down here, but these are the early signs that you look for. Certainly these ones are at the top. I would be surprised if we sort of revisit these levels up here. But as we know, sort of support and resistance can be the same thing. So I would be surprised if we do get rally attempts at some point to come up and tag the underside of this sort of rising support before we see a further sort of drop off to the downside. So if we go, come down here, found rally. Like, it could go boom, 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 like this, and then back up here. But point being is that I do believe this underside here will get a touch up before we actually sort of fully commit to the downside, and particularly with NFP coming up this week. We've got ADP tonight. We've got GDP for all US data. So, you know what I mean? There's a lot of sort of catalysts there that if the prints go in a certain way, we could sort of be seeing a bit more sort of further downside on Aussie, on DXY to come. And finally, just gold. So gold, it's just traded perfectly since it popped that downward channel. Look, you can see here, it was a very sort of structured sell down, whereas the sort of like, it was just respecting these falling resistances and falling supports just almost perfectly in that each time, bang, respected, bang, boom. So it was very sort of straightforward in that. But as I say, sort of once we broke out, gold loves to do this. I've mentioned this a number of times before. It makes its move. It's going to fly around, and it doesn't make it easy for anybody because at one stage this is a nice big bullish candle. Everyone's great. It's broken out. Boom. Oh no. Bang. Here we are back down again. Again, we're going out here. Okay, this time we've closed outside, drift, 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 bang, big bullish candle, closed outside. What do? Boom, back down again. So it doesn't make it easy to sort of make money on it unless you're sort of buying those dips and committed to the upside move. But at the same time, you're sort of seeing these stuff repeat time and time again. Look at this move here. Of course, you know, we've whipped everybody both ways here, but certainly downside here, long wick, we moved up. Same thing that we saw last night, and this is the thing, it's sort of this at one stage here, comes up, looks like it's rolling over, comes down, this would have been a long sort of bearish candle. What does it do? Fires back up, hits all the stops. Anybody that's been in, so these are the 4-hour candles, so anybody that's been in for the last day or so is just taken out, and then you see the move to the upside. So, I mean, these are the things that sort of, when you trade it time and time again, you start to pick up, you start to notice these things, and, you know, I mean, you can use them to your advantage, but you just have to be sort of aware of where they're going. And finally, actually, just a quick look at China, or USD and yuan, we like to call it. It's really coming down to a bit of a point here. Been hard to sort of pick what they're doing with this because you've seen the PBOC in that intervene at the top here, and I assume each time, or at least at the second time here, as it was driving back up again, they've hammered it down again. So, I mean, you're seeing large sort of emergency measures coming in from PBOC at the moment. A lot of the stuff to do with sort of putting injections and sort of cheaper rates for people to sort of trade and do all the stuff with their stock markets, and they're trying to address their sort of housing market sort of stuff. So I mean that's ultimately what has led to this incredible sort of weakness. I mean, if you want to sort of go back how far it is, this is just a deterioration of the currency. But more recently, as we've sort of visited these more recent highs, which obviously they've just tagged over here, we've seen a bit more of a sort of gradual cooling. Like certainly these most recent highs have provided a very strong support. So I'll clear a bit of this up so that we can see it a bit better. But I'm still sort of looking for the downside here. Obviously, we had a bit of an attempt to break out through this falling resistance again, and then the sort of the US data came out and sort of stuffed them back in there. So interesting to see what happens, but we're really coming to a make or break situation here because this has been tested 1, 2, 3, 4, 5, 6 odd times, plus or 7 odd times, sort of coming back down here. So there's got to be a limit to how much pressure and how deep the pockets are, I suppose, are of the people that want to buy this at this level because, they've bought up, they've bought up, they've bought up, they've bought up. So everybody that's sort of like going, yep, sweet, I want to get onto it here, they'll all be sort of putting their stops right here. That's going to be your stop loss area for anybody that's gone long here, long here, long here, long here, long here. They're looking for a big sort of continuation, major breakouts to the top side here. I don't know if they're quite ready to get that, but certainly if you've got the stops just down below here, that's going to add a lot of liquidity to it as it sort of breaks through these zones and actually holds down here. So as you can see, every time buyers are coming to the party, even as we speak now, they're sort of starting to push it up again a little bit as well. So yeah, it'll be interesting to sort of see what happens when this breaks, but certainly I think another break outside this falling resistance, another break and close outside this falling resistance, or a break and close down underneath what I'm calling now this sort of lower demand side support area around this stop zone here. I think this is where we're going to start to see. This is the move that I've been sort of looking for, with the first price target down here at the 61, with a bounce, and then further down to price target 2, which is that main trend that we've sort of seen sort of coming, I can't even remember, for like about a year or something like this, a better part of a year. So yeah, interesting to sort of see where this goes from here. Cool, that's about it for now.